Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
JP Morgan, they're going to impose new fees on the access for open banking providers. That has the potential to really change the dynamics and the economics. For the banks to participate, they need to modernize their platform. They need to add APIs. They need to have real-time components.
I still remember when everything was flat files, it was on-prem, mainframe style. Now we're talking about hitting major financial institutions with APIs to gather this data.
Our onboarding experiences, our risk and compliance, reconciliation, it all has to be really smooth and modern, using tools to augment or transform sticky kind of manual processes. That
a lot of people underestimate where their line is. And then when you dig into it, the lines just slowly creeps down.
January and February this year, we saw consumer behavior almost stop. Large companies that were thinking about how to upgrade and modernize. So those were key indicators for us to think about where to take our business in this evolution that we're in now.
ISO 20022, that's going to bring even more data into it. From my experience helping fintech companies build their strategies around all of these changes is shifting dramatically.
We've seen instant payments come online in the US from RTP network, FedNow platform. Different types of businesses figure out where instant payments are useful.
Real-time payment rails. Is it the next payments frontier that this is the direction that it's headed?
In some ways, it hasn't changed at all. And in other ways, it's changed completely. The disappearing of payments, what we're all searching for.
Having advised fintech companies on scaling their operations and the strategy of product development, I know how hard it is to make the transition from the founder's innovation first mentality over to the need for a scalable business progress. Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple. Welcome to Fintech Confidential series, Leaders One-on-One, where we sit down with fintech leaders to learn about what drives their passion for fintech, leadership lessons, and for their business through their life stories. I'm Ted Huff, your host and founder of fintech advisory firm Voalyre. And today I'm joined by an amazing guest, David Glaser, CEO at Dwolla. I've collaborated with startups and industry giants like Visa and MasterCard and Apple and Google and Amazon and Walmart. And through the 25 years of experience providing strategic advisory services and speaking in industry conferences, I've learned that successful leaders combine technical expertise with strategic vision. And Dave, well, he embodies this. Dave, welcome to the show.
Thanks, Ted. It's great to be here. Thanks for having me.
So, if you haven't done your research on Dave, he brings over 25 years experience, and his role now is the CEO of Dwolla. But his path wasn't exactly straight. I mean, he grew up in a small coal mining town south of Pittsburgh. He originally planned on becoming a high school math teacher before discovering tech consulting at EDS and IBM. And that analytical mindset has served him very, very well as he's moved into payments at CyberSource in the 2000s. And that analytic mindset served him well as he moved into payments at CyberSource in 2000, right when the online payments were just figuring themselves out. Now, I remember we called them internet payments at the time. So it was kind of fun while that was all going on. And what makes Dave's story really unique is that he's combined goal perspectives with hands-on leadership, and he's led teams through major industry shifts. At Visa, then packed up his family and moved to London, ran product strategy at WorldPay during Europe's open banking boom, and then helping navigate WorldPay's $10.4 billion merger with Vantiv. He then joined MasterCard, where he launched their first cloud POS acceptance technology. And if you think Dave is busy when it comes to being in the office, that has nothing to do with it. He's completed over 2 Ironman, not the small ones, the big ones, the 70.3 races. These days, he's fascinated by looking at AI tools daily to spot new ways to reduce friction. Now, we talked about Dwolla, and they're a leader in account-to-account payments in the U.S., offering full-service platform that replaces legacy technology with unified solutions, improving payment security, data visibility, and customer experience. Today, we're going to explore Dave's insights on payment industry evolution, operational scaling strategies, customer behavior patterns, and what he's seeing through that transaction data, his vision for account-to-account payments, and what is disrupting the card-centric world that we currently live in. Dave, as you and I were talking about when we were preparing for this, I had the chance to meet Dwolla's founder, Ben, way back in 2012. We were at a conference, and it was so funny because everybody was talking about how wonderful everything was and how everything worked perfectly. And he got up on stage and he's like, all right, so all of this is broken. All of this is broken. We've got to figure out a better way to do this. He's like, we just got to build it from scratch. You know, I've advised dozens of payment startups, and I can tell you that Dwolla's account-to-account focus was years and years ahead of where the market was and is finally heading. Dave, I've also seen how perspective shapes strategy, and you've witnessed this industry transform across multiple major players, from Cybersource to MasterCard, now Dwolla. How has your perspective on the payments landscape evolved from your early days at EDS to leading Dwolla today?
Geez, Ted, I feel a little dizzy and a lot older than I did before we started this podcast already, the way you introduced me here. In some ways, you know, to answer your question, in some ways, it hasn't changed at all. And in other ways, it's changed completely. You know, in terms of how it hasn't changed, we're still paying, right? We still pay each other. Businesses need to get paid. Individuals want to pay. We use credit cards. We use debit cards. We use checks. We use ACH. It's the ways we make it happen, I think, that's changed the most. It's the innovation that we brought into play to remove friction, to make it easier for folks to help us really enjoy sort of the disappearing of payments. I think is what we're all searching for. Make payments go away and make them so simple that we don't even think about them. It's been a fun ride on this journey, but we're not all the way there yet.
Well, I know you mentioned that it's the same but different. So what fundamental shifts in the payments infrastructure do you seeing happening right now that maybe most people are missing?
Where we play in particular, where Dwolla plays, is in the account-to-account and open banking space, specifically in the US. And so there's a lot of activity happening there. So that's one that we can dive into. Another one is the excitement around AI and how AI and machine learning is being infused in all elements of legacy processing, sort of recent processing, and how do we, build and manage new systems and payments. And then third probably is stablecoins. There's, everybody's so excited about stablecoins right now. There's a lot of announcements and a lot of new thinking and advanced thinking about how that might change the financial ecosystem.
You hit on a few things, but I was actually kind of surprised you didn't mention anything about open banking regulations. How is that impacting the way that the infrastructure is shifting?
Yeah, it's interesting. July 2025, and we've got news from JP Morgan that they're thinking about, or not just thinking about, that they're going to impose new fees on access for open banking providers to gain access to consumer checking accounts, information about those accounts, et cetera. And, that has the potential to really change the dynamics and the economics of how we link apps, applications, websites, basically today's modern way of interacting with businesses for consumers and other businesses doing B2B initiatives, how they access bank account data, how they access things like account and routing numbers, how we look at fraud scoring. It's going to add a whole level has the potential to add a new level of complexity, and more importantly, a new level of cost in every single transaction that we do. I
saw that announcement as well, and it just, in my mind, Yes, I'm going to date myself. I mean, I still remember when everything was flat files, where everything was on-prem, mainframe style platforms. And now we're talking about hitting major financial institutions with APIs to gather this data. It's really interesting. And I'd love to say that I'm surprised that JPM decided to say that they were going to charge people for it, but I'm not really surprised. They've always looked at the customer data as being their data, not the customer's data, which is kind of interesting.
It is interesting. And I think that is an important perspective. I remember, the time I spent at Visa and the time I spent at MasterCard, we always thought that way too. It's important. Visa and MasterCard always say like this is not our data. This is the consumer's data. And they're always very careful of protecting that. But it was interesting. They also, in essence, were protecting the banks too, the issuers and the acquirers in that way. So they were trying to create that neutral sort of third party status where they can be the network and be helpful to everybody, but also be engaged and involved and see all the data. So that's happening. But the other side of it is, there's got to be infrastructure that gets built to support this new technology that allows for open banking to work. And so we look at the major players that have built out this infrastructure. They've built great infrastructure, and they along with the government that's trying to put in the CFPB standards, are requiring banks to participate. For the banks to participate, they need to modernize their platforms. They need to add APIs. They need to have real-time components, et cetera. So it is costing the banks to be able to build out the infrastructure to support this innovation. I think people were surprised, or taken by surprise at least, when the announcements came out this week that they're actually going to move forward with it, because it will upset the economics, as we said.
We were starting to think that the only time that we were going to see open banking is when it was fully required, and it would have to be legislated into a level of such minutia in order to get the level of data that was needed from these financial institutions. So we're seeing this new announcement as being a positive that, hey, yeah, we'll give you the information. It's just going to cost you, versus we're not going to give you the information until we're forced to. And that is a really positive direction, at least from my perspective.
Yeah, I think that's a great perspective, right? You're looking at it from a glass half full. I love your optimism. And, I think we need to weigh that against what's happening in other parts of the world too, right? So US is kind of late to the table when it comes to open banking. And it's mostly because we've been driving our open banking initiatives through innovation. These innovators that are pushing apps and trying to connect apps to make payments disappear through access to bank accounts and bank account data have done that really through innovation, right? We've slapped up some APIs. We've tried to make it easier. We build apps. We put them out there in the hundreds of millions of Americans' hands. But that's taken a little bit of time, and it hasn't been a ubiquitous experience, unlike other countries or regions in the world, like in Europe, where PSD2 really defined what open banking was going to be and how it was going to work. And it just kind of demanded what banks had to do and what fintechs had to do and what consumers and banks were going to do. And then same thing with India, with UPI, and Brazil with Pix. And we saw a similar sort of regulatory and standard driven approach that pushed the open banking standards faster and made them more ubiquitous there. So it's the opposite here. And so to your point, I think the more people that get on board with the idea, the better. It's going to happen faster, but there is going to be some friction, like new fees that we're going to have to deal with and we're going to have to figure out. And I think there's a lot of backroom negotiations even today, probably, and over the weekend, trying to figure out how this is going to work, because it could upset the apple cart on some of these businesses that were trying to sit in the middle and become these significant API players.
You touched on it. This causes another issue, operational. Like all of these changes that we're talking about, from payment methods to account access to flow of funds, especially here in the US, we've got more options now than ever on how we can move value. What was the biggest challenge that you had coming in as COO, and how did that lead you to the CEO seat?
Yeah, so there were a number of challenges. One of them was systems. Even though Dwolla is probably like always been seen as a startup. We're one of the longest the longest and oldest startups that people know. The good news is we have a great reputation and we've been around for a while and we continue to grow, but we have, evolved. And the systems have evolved over the period of time, more than 10, 15 years that the company's been around. And so, thinking about that evolution has been really important. When the company was founded, RTP didn't exist. Open banking didn't exist. These were systems that the company had to figure out how to create and fill gaps to make bank account payments easy for innovative startups and new businesses that were trying to really think about how they could leverage bank account payments to keep costs down for consumers and businesses. So we still had some of that legacy when I joined the company. Also, Dwolla was really proud to be a sort of middle America founded business. We were founded and we're still headquartered in Des Moines, Iowa. We're really proud of those roots. The talent pool, though, with payments expertise, banking and financial institution expertise, wasn't huge in Des Moines, Iowa. A lot of insurance companies and publishers and farmers in Iowa, but not necessarily payments nerds like you and me originally. So, there were a lot of things that Dwolla built from the ground up, but were kind of homegrown. It didn't exactly fit in with some of the standards, typical ways that payment companies were built and run. So those are some of the things that we focused on when I joined the business, kind of bringing payments industry, payments expertise, but then also a roadmap for how we can modernize and update to move fast, to be able to take advantage of where the technology is today, but also where the customers are going. And even now in the 4+ years that I've been here, right, so much has changed, and the biggest change is AI. We can dig into that and how that's changing everything that we think about. And truly, it is every single minute of every day we're thinking about it. So yeah, I think those are some of the key things that we really focused on. Another I would say is really, as we think about scaling the business, now that we are bringing account-to-account payments to larger and larger businesses that are digitally transforming themselves as well. It's really important that we make the experience of working with Dwolla as streamlined as possible. So our onboarding experiences, our risk and compliance checks and experiences, of course, the payment processing, the dashboards, the reports, the reconciliation, it all has to be really smooth and modern for our customers. And so making sure that is a real first-class customer delight is really important to us too.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how. Well, having advised fintech companies on scaling their operations and the strategy of product development, I know how hard it is to make the transition from the founder's innovation first mentality over to the need for a scalable business process. How did you balance that coming in, and how do you keep that curiosity of that innovator, that founder's innovation, continuing to go within the organization?
Yeah, well, Dwolla kind of brings that sort of always on the leading edge, leaning forward in your chair perspective to everything. Two of our core values, for instance, one is we are never done, and the other is change the status quo. Those are intimate to how every Dwolla thinks and every Dwollan comes to work every day, and how we challenge and push each other to keep doing better. Some of the things that we had to think about were manual processes as we started our scaling journey. Because we're dealing with banks, financial institutions, there's just a lot of mundane processes that still exist. Things like return processing and SUD processing and proof of address. And there's all these sort of back office things that happen that were never really automated in the past. Banks and other firms would just have hundreds of people and, back offices in rural America answering phones and pushing paper to take care of these things. So we've really thought deeply about how to automate those. We don't want to scale with human methods and human talent. So the first way we've tackled that is through process documentation, like really nailing the process, making sure that every process is well understood and that it's as consistent as possible. I'd say the second part of that is sort of then reducing the number of systems that we have to interface with, but as few systems as possible in a singular database or data lake, if you will, to store data and to work with data from. That's been really important. So those are significant initiatives that we focused on. And then another was, thinking about like interfaces, websites, dashboards, portals. How do we make those as streamlined as possible too? So our people and our customers have sort of one place to go to see their information, to manage their information. As we got those three things in place, consistent process, singular data, singular systems, then what we've been able to do is then start to rethink, how do we automate some of those processes? How do we bring today's automation, new CRM systems or automation systems using, again, AI tools like we're using tools like Make and Gumloop, which are really interesting to augment or transform really sticky kind of manual processes that the computers can just do for us now. So there's a stepwise approach that we've taken to build all these things, and it's really worked well for us and allowed us to scale without hiring anybody. We haven't hired a net new person in the last 2 years.
Oh, wow. That's really fascinating. I've seen this pattern before where companies hit the proverbial wall where the manual processes just can't scale. Like you mentioned, just adding more and more people, it got to a point where adding more people actually made it go slower or made it harder to do. How do you identify what processes to systemize next? I won't say first, but how do you identify what's next to systemize and automate?
It all comes down to metrics. We've created great visibility into our processes and our systems. So like I said, we have a few key internal systems that we use, and they're all metrics driven. So we have dashboards to be able to see how many returns do we handle, how many customers call in for different reasons, and what are those case types that they call in for. We can see the number, we can see the time it takes to close those cases, and we can see the number of handoffs internally and externally that we take for any of these processes. And sometimes it's interaction with customers, but sometimes it's these handoffs and interactions within the company. And then it can be on the other side too, where we're interacting with our partners like banks or other third parties that we might interact with. So we've been able to set up the system so that we can track and measure all those and have insight. Then we just take the simple approach is like, what's causing us the most pain? What are the most cases that we're experiencing right now? And is there opportunity to streamline and automate these things to take them out? We do that every day. So one of the most complex areas of business in the last 6 months we had is something we call business verification. There's a lot of tools that make it fairly easy to identify who a consumer is when you're registering them as a user in your app. We call that KYC, know your customer. But the systems and the available data to actually verify a business, if you need to know your business customer, is a lot more tricky. So this is a great example where you have to call a Secretary of State in a particular state where the business is represented. You have to have them fax you or email you documentation about who the beneficial owners are and, how many people were part of the founding team and what their bank accounts are. There's not good API access to that data. So that's been a troubling area where we've traditionally had a lot of manual efforts. So what we did the way we apply this is as we mapped out those processes and looked at the time it takes for us to solve those, we developed this sort of 2-stage approach where we call it above the line thinking and below the line thinking. We say to ourselves, in any process, anything that absolutely has to have a human look at it, doesn't have an API that we can call, or maybe has sensitive identifying information like PII that we can't put in a system or share with others. We call that above the line. A human has to be involved in looking at and engaging with that part of the process. anything else that we might be able to automate because there aren't rules, it's predictable, there's APIs that we can programatize, we call that below the line. So what we've done is we mapped out these processes and looked at them is we identify what's below the line. Anything that's below the line, we get to automate. And so we just tackle that. We throw automation tools, we hire interns, they use these tools to automate everything below the line. And then the above the line stuff, that's where our smart people are spending the value added time to solve problems. And so we've been able to dramatically reduce those processes to have a lot more below the line so that people are freed up to work on these high value tasks.
And they're critical. I mean, the ability to identify above the line, below the line sounds relatively simple, but one advantage of me working with so many payment companies is really seeing how difficult that has become. Because just because Dwolla needs to do the KYB, the rules and the pieces behind that to meet the needs of the customer and the regulatory environment you're in is different than ABC company over here. And yes, you can both get access to the same systems, but the data just may not be there. A lot of people underestimate where their line is, because a lot of times they're like, the line's way, way, way up here. And then when you dig into it, the line just slowly creeps down. As you start automating some of the processes, that line just kind of creeps down when you realize, hey, I have to have a human involved, or this one isn't a quite perfect match, so we have to do this, or there's a variation in something that requires you to have a human figure it out for right now, and so you can figure out how to position the rule or the data model to extract that data properly so that you can systemize it. It's crazy how complex it actually gets.
It really is. And frankly, I mean, we really got stuck on some of the automations we wanted to do. I mean, as the AI tools started to become more powerful, I was hungry to use them. I was like, we can automate everything in our business.
Yes.
But then we'd hit these blockers the way you just described. But then we'd really get stuck. We were like, oh, well, we have this end-to-end process. It involves these blockers. So we're going to set the whole process aside. So it took us a while to get to that above the line, below the line framework that we developed for ourselves, because we would just set it aside, but then we'd still have the biggest problem remain the biggest problem for us. And we'd start solving like little problems like, oh, how do we automate something in Slack? Or how do we automate, an SDR process? Things that were easy, but they weren't the biggest problems. We still were going to have to hire people if we took on more customers. And I didn't want to hire anybody. We didn't want to hire people. So that's when we said, we got to break these big problems up into the smaller chunks. And so that's where, we deployed some of our engineering thinking to process management thinking. We got away from, we had to move away from the people that were actually doing the process, because they don't necessarily think like engineers. And so we brought our engineers to bear and we said, don't try to program this whole process. Tell us what you can program. Tell us where you think the AI can work. And that's when we started to unlock breaking things into smaller pieces. And then we got that above the line, below the line framework. And then it just made it clear for everybody. And it's set a new way of sort of innovation forward for us to move even faster on those bigger, longer process problems.
That is so common that organizations will take the entire process, set it off to the side and say, we'll come back to that later. Let's get some quick wins over here. And instead of doing what you did, right, is you took the big process and you're like, all right, well, I have experts in this particular part of the process. Well, maybe if I get additional eyes from outside of that, maybe from engineering, maybe from another part of the operations, maybe from sales, who knows? They may have a different way of looking at it, and then being able to separate out those pieces and attack the areas you can attack within the full end-to-end process. That is a huge blocker for a lot of folks. And I can't tell you how many times I've helped companies break that block because they just got stuck there.
Yeah.
I do want to understand from you, because, the types of data that Dwolla sees is unique. I can't think of a better way to say it. It's a unique data set. this is two-part. What is the most exciting things you're seeing, and what are the most concerning things you're seeing?
We do see a lot of trends, and we pick up trends really fast. For instance, at the beginning of this year, right after the election, a lot of announcements started to take place around what might happen with the economy and tariffs. And immediately, I'd say in January and February this year, we saw consumer behavior almost stop. Like it really slowed down really fast. We never saw a January and February go flat the way it did. Usually we see holiday season, end of year kind of picking up, and then that extends into January and February. And frankly, that's kind of the trends that I've always seen in the payments industry. And what was interesting too is that a lot of our flows, well, I'd say our flows are mixed between B2C and B2B because our customers span virtually every industry. And so their customers might be consumers or businesses or both. And so, but we did see a slowing up demand right away. So we figured that was because of the disruption post-election or the concerns post-election. But then as things settled down, as tariffs started to be delayed, then things came back and things have been pretty normal since then. So being able to be able to see what's happening in the economy is really interesting. Sometimes it's it's across the board, and then sometimes it's more specific. It could be time of year or it could be industry related. So, what was it, 2022 when we went from a zero interest position to interest rates rising to where they are today. We saw a dramatic switch in volumes in credit lending and real estate, for instance. As soon as there was a small tick up in interest rates, we saw those volume change. And it frankly concerned us as a business because a lot of our customers, probably 20% of our customers, were offering credit lending and real estate, property management type solutions on our platform. So it impacted us. Of course, it impacted all fintechs across the ecosystem as well because they started to lose their venture funding because money wasn't free for fintech funding. And a lot of the Dwolla customers were fintechs, startup fintechs at the point. So that was concerning for us too. So, these trends could affect us in interesting ways as a business. It also then, therefore, has impacted our strategy too. It helped us realize that account-to-account open banking is a real thing. We continued through that process between, say, 21 and 2024, really, to see those shifts. And we responded. We realized we needed to respond to another interesting shift that we were watching, which was digital transformation of mid, large, and enterprise businesses, companies that were upgrading those mainframes that you worked on in the past and that we both have, right? And starting to make that shift. So seeing those volumes change and those macro changes and the way the data was changing, we were getting more attention from large companies that were thinking about how to upgrade and modernize. So those were key indicators for us to think about where to take our business in this evolution that we're in now, as we're focusing more on bringing account-to-account payments to larger businesses.
Have you started to be able to maybe predict what might happen, or is that still just one of those things where the broader economic trends are just something that you're able to understand?
Yeah, I don't think we're ready to help people know when to buy and sell stocks yet, if that's what you're getting at. And we haven't, even though we have some interesting lottery customers and some gaming applications and crypto applications that use the platform. I don't think we're ready to help people predict the future. You're still going to need a DeLorean time machine to be able to do that. But yeah, I think in terms of the data and the amount of the data, we're definitely able to do more sort of granular predictions around, is a transaction likely to be fraudulent? Is it likely to be returned? Going back to some of those open banking thoughts, being able to see into bank accounts before you try to debit or credit a payment is really important. And that's new visibility that we all have today through these open banking tools. We can see it. We can see the balance of an account. We can even look at transaction histories if the consumer gives access to that. So, lenders are able to say, well, this person, they get paid on this date, they get paid this much, they have this many bills. We know that we can lend them and they still have room left in their checking account after payday to pay this loan back if they want to buy a car. So there's all these new insights into the data. So, it's not exactly like the sexy predicting the future, but it's predicting if I'm going to have good customers and if this customer is going to stay a good customer for a long time. And I think businesses really value that.
You're essentially getting real-time economic signals that traditional analysts, economic analysts might miss overall. How would you think fintech companies should be thinking about the transaction data that they have access to, and not just for processing, right? Like you mentioned, is it going to go through? Is it not going to go through? But more for strategic insights and where their customer might be headed.
They should be leveraging the machine learning tools and the artificial intelligence tools that are available to them to analyze every bit of data. And it goes back to that idea of centralization is really, really important. Companies, especially legacy companies, whether they're 5-year-old fintechs or larger companies, generally they have multiple sources of data. That's like a big no-no in today's future, I think. So new fintechs, think about centralizing that data and keep it centralized as much as you can. And then absolutely be focused on leveraging machine learning and AI tools right from the start, because it's so much easier now to analyze that data and to predict trends and to compare different data elements to see if they are also predictive of potential trends in your business. You've got to just constantly be rolling that data around in the cubes and paying attention to it and looking for those trends and then responding to it with new products, new services, new advertising methods, et cetera.
I've been saying this for a while, but it sounds like you're also saying like the data itself has become just as valuable as the payment data itself. And I think that is really interesting that we're getting closer and closer to that. I've been looking at that for over a decade of how do we manage that data? How do we make it valuable, both internally and externally? And like we mentioned, open banking is making a bunch of changes, but also, as we recording this mid-July, we've got the ISO 2022 that is kicking in as well. That's going to bring even more data into it. From my experience helping fintech companies build their strategies, infrastructure around all of these changes is shifting dramatically. Like we were talking about how do we optimize, like we were talking about earlier, it went from optimization to now how do we see these other areas coming in? And I'd like to kind of drill down more into Dwolla's tech and process and what you're seeing in the account to account and real-time payment rails. Is it the next payments frontier that we've been told by the organizations, the Fed and the clearinghouse? So this is the direction that it's headed.
So let's see where to start. So I'd say the data that is available to send with payments is more than ever, and the specifications that are available allows that to be so and standardized. As we talked about, the U.S. seems to be last in adopting a lot of these standards that become popular around the world, but slowly but surely we are adopting them, and it's allowing us to communicate better here in the U.S., but then communicate better with partners and businesses and financial institutions outside the U.S. too. So with that in mind, I think the big theme that you just referenced that's pushing a lot of this is the theme of real-time payments or instant payments. And we've seen instant payments come online in the U.S. from RTP network back in 2021, and then just in the last year or so from the Federal Reserve with the FedNow platform. Of course, the ACH network has their same-day ACH system as well. So what we're seeing happening is slow innovations, I call it. It's a slow ramp as different types of businesses figure out where instant payments are useful and frankly, where they're not useful. I think they're sexy. They're cool, right? Everybody's like, oh, I can get the money right away. But sometimes that's not the best way to pay. Maybe it's more expensive. Maybe it's just not necessary. Maybe it's riskier. So as we bring on, as Dwolla in particular brings on more and more of these payment methods, and by the way, we do have all those payment methods supported and those rails supported on our platform, we see different businesses taking different approaches. So for pay-ins, usually businesses are okay with slower payments, right? So you think about like in paying your insurance premium as a consumer, you pay your insurance company. Well, once you sign up and you've paid that a couple times, whether it's through ACH or you write a paper check, they know you're get the money. And if they don't give the money, if they don't get it, they're just going to turn your insurance off. So that's a really like safe payment. It's a pay in. You've got a good or service that you can turn off as the merchant, so you don't really worried about chargebacks or returns. So there's very low risk, and a slow payment method that's predictable is okay. So real-time payments aren't a great opportunity there, but a payout, insurance company being able to pay you out if your roof gets torn off after a hurricane on a Saturday morning, off business hours and banking hours, that could be really powerful, right? That's a real differentiator and a real high customer satisfaction use case where a business is going to want to take advantage of a real-time payment. Other cases might be payments to gig workers, right? I deliver your food, I get paid. I deliver your neighbor's food, I get paid again. Some gig workers are living paycheck to paycheck, and that's really, really important for them. Remittances is another. If I'm sending money home to family somewhere else in the world, speed might be important, and the data associated with that might be important, especially for business to business payments. If we're talking about keeping track of tariffs, where goods are assembled, where goods are made, partial payments, all that data is really important. So it's a little bit of a mashup, but we think about data is really important for global trade. It's the real-time nature of it makes it more important because we have to reconcile in real time as well.
You're building a fintech product. You want to offer digital assets, but wallets, that's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Defense. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Defense. MoonPay scales wallets securely with Defense. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Defense to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Defense wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Defense, secure wallets built right. There's so many pieces you hit on here. Like, how does someone decide? How do they make that decision between wait and see and do it now when it comes to these types of new methods and timing of the payments? How do you see your customers making that decision?
Yeah, traditionally it's kind of been slow, right? It's through experimentation, or it's through how they always did it. So we see our customers up until very recently typically would focus on, they have a business model. They've been doing it a certain way for a long time, but now it's outdated. It's on older systems, or it's expensive, or it's paper-based, or all combinations of those things. And they want to upgrade and modernize, take advantage of today's technology to make have the most streamlined experiences they can. So what they'll usually do is they'll bring what they have to us, and they'll bring that problem statement, and we'll help them solve that problem statement. And then, so maybe they say, okay, well, I'm doing ACH, I still got these other systems in place. I just want to make them faster and better. So we help them do that. Want to overlay open banking, those types of things. Great. We do that. Then they start thinking about, okay, what's RTP all about? And then they'll run some tests, right? Oh, does it make sense to do RTP for insurance payments? No, but it makes sense for claims. Yes, we'll add them for claims. But then they experiment. Well, does it make sense for all claims or just certain claims? Could I do same day ACH Friday at 2:00 during banking hours? Is that good enough? Or do they really need it in a second on Thursday afternoon? They probably don't, right? Or Friday afternoon. So they don't need an instant payment for that. So that's where things are changing today. And the way we're thinking about that is that we want to make it as easy for these businesses to figure out the complexity that you just asked about, because it's been hard for them and it's been slow for them to figure it out and to adopt when new payment methods and new rails come online. So how do we make that faster? Well, a company like Dwolla can offer all of those solutions on our platform the customer should be able to just share, our business clients should be able to share what their preferences are and what their business model is. And when I say preferences, I mean like how much do they want to pay for a payment? What day of the week do they need to make payments on? Are pay-ins more important than payouts? All the things that we just talked about. They would share those preferences. And then we would use our tools and our intelligent platform to orchestrate which services get called when, which rails get called when, which open banking tools get used for a particular service, which cross-border payment method might be the best, whether it's a stablecoin or an FX or a digital wallet, those types of things, or a debit rail. So that's the future of payments. And there's a lot of talk about orchestration. This is the way we think about orchestration at Dwolla, is let our customers tell us how they run their business. We'll figure out all that complexity. In the past, they had to try to figure it out themselves, but they usually weren't very good at optimizing it.
Well, that's not the business they're in, right? So
it's not the business
really
they're in.
Hard to figure out how to optimize for that piece when it's not the core to their business.
You're right. And I think that's the real opportunity for infrastructure players. There can't be a lot of infrastructure players because then it becomes too complex. So we see infrastructure players develop very robust tools so that innovators in particular industries or verticals can focus on that vertical stack, but not have to build the infrastructure themselves, right? And that's the value that we bring, and a lot of our competitors in other spaces bring too. You've got to have infrastructure. In order to scale infrastructure, you got to be the best.
Scaling is where a lot of companies struggle. Getting it down, getting the proof of concept out, getting it to a critical mass, it can be done. But when you want to take it to that next layer, that next level, that's where you have to really dig in and really determine, I call it, who you want to be when you grow up. Yeah. Because what you did to get to where they're at that point isn't going to get them to the valuation or to the customer base or to the state that they want to be in going into the future.
Yeah, exactly. I think what we see in terms of when payments get embedded into verticalized software, it happens two ways. Either you have a payments team that says, hey, we've been focused on retail for a long time. We want to create the best retail stack for retailers, and we're going to build the best payment stack in there. So that's payments people building a stack. Or maybe they're payments people that specialize in, say, insurance. And so they say, we're going to bring payments to insurance. But they know insurance and payments, so they go and do that. Most of the time, that's not the case. Usually the innovators are saying, hey, we really know supply chain management. We know what it takes for truckers to pay truckers and to handle tariffs and cross-border movement of goods. But we don't really know how to set up all that money movement that is inevitable, has to be part of the system. And so we see those folks where they'll outsource their infrastructure. Right? They don't need to become payments experts. It's not their business, to your point. Sometimes it happens the other way, like I described, but it's usually the latter. It's usually folks know an industry and they're solving a problem in the industry and they need to embed payments. And that's really hard for them to figure out on their own. And they shouldn't do it. They should call us.
David, it's come to that time where I pull out my fun little crystal ball.
Ooh.
So I want you to look deep into it and look into the future. And based on everything we've discussed, and your experience in the payments industry, what do you see happening in the next 3 to 5 years?
So this answer would have been different 3 months ago, but my answer today is more stablecoins. I think stablecoin usage has the opportunity to fundamentally change the banking system, the financial infrastructure in the entire world, not just for cross-border, but everything, everywhere, allowing us to have digital money that's traceable, ledgerable, understandable, visible, and instant is going to be really, really powerful.
That's actually been the biggest conversation I've been having with clients too, is building out that strategy for them of how should they be looking at it? How should they be going forward? Should they be going forward? Does it meet their needs of their business? All these different pieces of it. and then looking into how we can leverage, going back to your discussion earlier about automating and doing all these different things. How can the different stable coins help them with that automation, help them with that process? Does it give that force multiplier?
If done right, and I think, by the way, doing it right means we need strong regulation. This has to be government backed and government supported, and we need standards. And the only way that can happen is with great regulation. I don't usually say that, but I think, just like the dollar is regulated and our banking system is regulated, we're going to have the same kind of infrastructure, but modern infrastructure, modern regulation for stablecoins. But it takes care of so many of the hard things that we talked about earlier, the manual processes, paper-based systems, legacy systems. In order to take advantage of stablecoins, we need new systems. All the new systems will be AI first. They won't have manual intervention because they're all API enabled. They will all have ledgers, so there won't be spreadsheets. So much goes away, but the adoption is going to be significant. And so we're going to see the leaders and the innovators really win because they'll be able to move really, really fast. And those legacy players like the Blockbusters and the Kodaks and the Xeroxes, they're going to get left behind really fast, maybe faster than the internet left them behind in the last big changeover. AI and stablecoins are going to be massively, they're just upsetting everything in our industry. We have to embrace it.
It's forcing us to look at things differently, right?
Yeah. Yeah. On a much faster scale too. Yeah.
I don't remember where I read it, but the pace of AI power, computing, the ability to grow and become stronger and better is becoming every 6 months, it becomes 30 times more powerful than the previous version. So just think about that. We're at this point where things are magnifying by 30 times every 6 months. And so the pace that's going to accelerate everything else for those who are leveraging it is going to be crazy. And for those who aren't leveraging it, they will become the Kodak. They will become the Blockbuster. And that has been a big conversation, even with a handful of companies that I advise for. Every time I'm like, oh yeah, we should do this. I'm like, all right, well, let's automate that. Let's use a system for that. Let's build a tool that allows us to not manually do it every time. And that there's a lot of logic that goes into it. And I was reminded at an event a couple months ago, one of the guys who was the lead engineer for Microsoft's Copilot, he and I got in this discussion where I'm like, I don't think AI can reason. He's like, no. It can reason. It just can't make emotional decisions. And that's what we as humans typically do. We make an emotional decision and then we back it up with data. And he says what happens with AI is that it makes a decision based on data that then you have to adjust your emotion to.
Yeah. And if you don't, it'll just keep telling you what you want to hear because you'll prompt it in such a way that furthers your opinion or what you want to hear on that day. I've done that personally where I have an idea or the team has an idea and I realize the way I'm prompting this is having it tell me what I want to hear. And then I have like a devil's advocate clause in my personal prompt statement. Always be a devil's advocate too. Don't just tell me what I want to hear. Anyway, this is
that confirmation bias is so real, and it gets stronger and stronger the more that it does it.
It does, and it is scary. I mean, sometimes I think you talk about the pace, right, and how fast it's moving, 30 times, etc. That 30 times gets faster and faster and faster. It's mind-boggling. It takes your breath away. My goal is to build businesses and help people be successful in this short period of time that I need to work since I've been in the industry for a while, and then get out and go sit on a beach and let everybody else try to keep pace with it. So I don't know how long I could run on that treadmill because it's getting faster and faster. And I think my Iron Man days are behind me. So.
All right. Well, with your Iron Man days behind you and you wanting to just keep up with what's going on right now, what advice would you give fintech founders today that are building payment solutions or financial technology solutions?
It's a summary of what we talked about. Do everything with AI. Keep your teams as small as possible. There can be no manual efforts whatsoever. And understand the problems that you're trying to solve deeply. Understand your customers. Spend lots of time with customers. I don't think I'm saying anything new here, but those three things are so important. And today, I truly believe you can have, ratios of millions of dollars of revenue to each employee. And it's going to get bigger and bigger. And I think for anybody who wants to be successful, you can't stand on the sidelines. You have to lean in. You have to learn these tools. You have to embrace these tools, and you have to move fast. And then you have to be able to change fast too, because somebody's going to come up right next to you and do what you and three other startup founders were doing. They'll combine it. Like we see OpenAI doing to lots of companies every 6 months when they do a big release. You got to be able to pivot fast. Don't fall in love with your idea, because you're going to have to change faster than ever.
Got to make sure you have the balance between solving today's problems and then being prepared for future problems at the same time. That's something as you're working through it, you've got to keep your foot in the now, but your eyes on the future, I guess is the way that I would look at it.
I love that. And the future is close. The future is tomorrow, not a decade from now.
Yeah, get out your binoculars because it's gonna. What is it on the car? Things may be closer than they appear.
Yeah, on the window, on the side of your mirror,
on the car window. Yeah.
That's it. That's it.
Well, Dave, I want to thank you for sharing all of this. I mean, your insights and experiences and what's going on over at Dwolla. I mean, your perspective on scaling and growing and leveraging the latest technology has been super helpful and very insightful for not only me, but I know for the audience, I'll get a lot out of this. And this conversation truly reinforces something that I'm seeing consistently, is that companies that combine their global perspective and the technology with operational discipline seem to be the ones that always scale. And like you mentioned, early adoption is critical.
Agreed. You got it nailed. It's an exciting future.
It is. So thank you again, Dave, for coming on. And well, that does it for another episode of Fintech Confidential. And we want to thank you for sticking around for this episode of Leaders One-on-One. And remember, these conversations are designed to give you more than just the surface level sound bites. We're here to show you how the real operators think, the way they lead, and then the way they make things happen in fintech. And if you got value from today's episode, make sure that you subscribe and you don't miss the next one. You can find us on YouTube, Spotify, Apple Podcast, or wherever you listen. And if you want to go deeper into what we're tracking behind the scenes, sign up at fintechconfidential.com and be sure to share this with someone who's serious about where fintech is going. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawk.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.